Welcome to Wealth, Words, and Wisdom, where real-life conversations lead to financial clarity. I'm Ashley Carter, alongside my co-host, Carrie Boatner. In this conversation-driven podcast, we talk about real-life topics like parenting, marriage, business, faith, and leadership, all things that naturally lead into deeper discussions about financial understanding, long-term planning, and wise stewardship. Get ready for some honest discussions about money, responsibility, and the choices that shape our future. Let's get into today's conversation. Carrie, you know the TV show from the 70s where it's like, welcome back, welcome back, welcome back. That's what I always think of.
Oh, like Welcome Back, Kotter?
Yes,
Yeah.
I always want to sing that song when we welcome everyone back to another podcast.
Maybe you should start it off like that, Ashley.
So welcome back, everyone. You know, Carrie, we get asked all the time, what's the difference between an IUL and Infinite Banking and which one is better? And the real answer is it really just depends on the person.
That's right. Everybody has a different goal in mind, number one. And everybody is coming from a different place financially. We all have different experiences. And when we talk to our clients, we recognize that they are coming from their own individual place of what their goals are. Some people are wanting some more aggressive growth, some people more conservative. Regardless, we know that everybody wants protection. I believe it was in episode 2 where we actually talked about whole life or infinite banking. And in this episode, we're going to be addressing an IUL and what is that exactly. In many ways, it's very similar to the whole life, the infinite banking that we talked about. But this one is designed for greater growth because we're not accessing the money as quickly as we would in the whole life scenario. So, Ashley, why don't you tell us a little bit more about an IUL?
Yeah, Carrie. So an IUL is an indexed universal life account. It has a permanent life insurance component to it. But as we talked about with infinite banking, that's not really the purpose and what we're using these accounts for mainly. The biggest benefit is it has a cash value component. Now, one of the major differences, Carrie, in an IUL and infinite banking is we talked previously about how your infinite banking account is going to grow based on the profitability of the company that your account is with. So you're going to grow based on dividends, whereas an IUL account has growth that is tied to the market. Now, these accounts have a zero floor. So like we always talk about to our listeners, everything that we are going to offer you is going to have a zero floor.
Lose anything.
We're never
Right.
going to lose our clients' money, right? So even though these accounts are tied to market growth, they are not tied to market loss. Now, these accounts have caps and participation rates, but it has that downside protection, so you never have to worry about losing money in the market.
Ashley, as you were just talking about that, we've said repeatedly cash value. And I'm not even sure everyone understands what cash value is. And I'm going to just bring up automobile insurance. The truth is we pay money every month into automobile insurance. We never see that money again. Of course, we get to experience the benefits of that when we have an unfortunate accident. But one of the things I really am grateful for and see as such a huge benefit is that with these types of accounts, we talked about infinite banking. We're talking about this IUL, which is, again, another form of you owning your own bank. The beautiful thing is, as you're putting that money in, you actually get to borrow that money back out. You have access to that money. You never get that when you have automobile insurance. And one thing I find very interesting is we have talked to clients before that say that they have life insurance. I do the finger quotes with that. They have life insurance, but they're never actually told that there is a cash value component where there is cash sitting there waiting for them to actually utilize. And I love that we put the client's needs first. We make sure that they understand that, like you said, there is a life insurance component to this, but we're utilizing these accounts for growth, for maximum growth and access to their funds. So just wanted to point that out.
Yeah, I love that, Carrie. So, Carrie, some of the major benefits of having an IUL account is, like we mentioned, it is linked to growth in the market. And as we've talked about before, most all financial professionals are going to tell you that the best place to grow is in the market. You're going to have
That
the most growth there. So, it's great that these accounts are linked to market growth so that you get the biggest bang for your buck. But then again, we do not participate in those losses. So we're able to really customize based on the individual's needs, how much they want to put into their bank. And we can allow for additional deposits to be made to accelerate their growth, which allows for more cash value access. Also, there are major tax advantages to these accounts. And the biggest benefit, in my opinion, and I know you agree too, is that we're able to access this money tax free. And also, Carrie, not only is the individual able to access their own money tax free, but when this money is left over for their heirs as an inheritance, they receive that money tax free. Money sitting in a traditional savings account, you pass away, and your heirs get that money, they're going to have to pay tax on that.
they're also going to struggle to get it too.
That's right. So the fact that this is going to be quick access for your beneficiaries and tax free is huge.
Yeah, you're right.
And another benefit I would like to touch on is that these accounts can be used as supplemental retirement income. I think it's important to point out that the money that you're depositing into these accounts is with after tax dollars. And while it does have tax deferred growth, we're able to help teach our clients how to access all of that growth tax free.
That is huge because, as we've mentioned before, Ashley, even if someone has their money in a savings account with a traditional bank and they're earning that whopping, what we know to be right now, the average 0.039% interest, even when they earn that very small amount of interest on their money, they're going to be given a form that they have to report to the IRS, and they're going to have to pay taxes on that. And so here we have greater growth, much more than 0.039. That growth is based on the market. And then they get to access all of that growth and not ever pay taxes on it. So we're not just about growing your money and protecting your money. We're about helping you not pay money in taxes the legal way.
Yes, absolutely. You talking about having greater growth. I would like to touch on that and tell a story real quick. My 12-year-old son actually just yesterday put in an application for his own IUL, Carrie. So he started
And he's
working.
12.
He is 12. He has
Wow.
started working, and he is like, hey, I am ready to open my own account and start preparing safely for the future. So we were able to get some illustrations pulled up for him and see what it would look like if he opened a cash value life policy versus an IUL. And so both of those accounts are 100% protected from loss, but we were able to compare how efficiently each one would be growing, what would future growth look like in terms of cash value, money he'll have access to for retirement, and also what it would look like for his heirs whenever he passes away, if God blesses him with a wife and children and grandchildren. And I love that we're able to compare all of these different things, just like I was able to do with him, we're able to do with all of our clients. And like we always say, we're able to do this for free for our clients. I feel like it's such a big point, Carrie, that we're able to offer this as a free service to people and really help people walk through exactly what their specific needs are. There is no cookie cutter products here, right? Like we are being very specific with our clients and helping them with exactly what they need for their lives and their families.
I just want to state the obvious and celebrate you right now as a parent. I mean, the fact that your 12-year-old son has come to you and said, Mom, I'm making this money. I want to make some wise financial choices. That comes from a couple of things. Number one, you and your husband are both business owners in your own businesses. Your parents own their own business. You and your husband are very hard and very diligent workers. And your children are watching what you do, not just what you say, but what you do. And he's learning. And, we talked about this in one of our previous episodes. He always wants to know, when is our next episode coming out, so he can listen and learn. And quite sincerely, I was excited when the youngest client that I have right now is 28 years of age. And I thought, wow, that's really impressive that I have a 28-year-old client who's wanting to start his own bank. Now, your son has completely trumped him, and at 12 years old is thinking about watching his money grow. And with him, he doesn't need immediate access to his money. So you and I combed through his illustrations yesterday, section by section, line by line. We read all the fine print. And actually, it's good that we have that own experience with our clients, but doing it with our children. I just really want to take a moment to congratulate you on being a great parent and a great leader.
Thank you, Carrie, so much.
So, Ashley, I just mentioned that you and I went through the illustrations yesterday. Can you kind of share with everybody, what are the big highlighted areas that helped you and your son make a decision on this one particular account? Like, what were you sharing with him? Where was the strong points, the big selling points that caused you to lean in this one direction?
So, Carrie, I feel like the biggest selling point of the product he chose is the fact that, like you mentioned, he doesn't need cash value access in the next few years. I mean, he's 12 years old, he's living at home, his mom and dad are providing all of his immediate needs, and he is not going to be putting everything he earns into this account. So he's still going to have some play money, and he's not going to need cash value access immediately. And so one of the benefits of choosing this IUL account is that he's going to have much, much greater growth in the years to come. Now, with an infinite banking policy, you do get cash value access immediately. But with that, you're kind of sacrificing the greater growth that you could experience. So, like we talk about, being able to personalize these accounts and these products for individual clients' needs, we're able to kind of weigh it out. Like, okay, do you need cash value access now? Or can you kind of hold off on that cash value access and experience greater growth? So for him, that greater growth was what pushed us into choosing the product that we chose. So we're able to look at these two different illustrations that we had pulled up for him, and we're able to say, okay, when you turn, say, 20 years old, what is the cash value in the infinite banking policy versus the cash value that's available in the IUL? And then we also highlighted when he turns 65, which is typical retirement age, how much cash value access do you have at that point in each account, and how do they compare? We're able to look at the year of efficiency, which is the year of the policy where your cash value is growing by more than what you're putting into your policy every single month. We also were able to talk about his year of equity, which is the year of the policy where his cash value that's available will be greater than the total amount of premiums that he has paid in over the years. So once we compared both of those, it was really a no-brainer. I thought it was so funny, kind of, you and I, like you said, we went through this line by line. And that was the exact term that you said to me. You said, well, this is a no-brainer. And I told you, I said, I'm going to go over these illustrations with his dad tonight. I'm going to show them to Reese. We're going to talk about them and make a decision. And that's exactly what Sam said too. My husband, he said, oh, this is a no-brainer. So I love how these illustrations really show you can look at it on paper and see the power of this growth over time, and it makes your decision so much easier.
Yeah. There's two things that you just mentioned that I want to ask you to please elaborate on. Ashley, can you Give us a real life example. Just give me some numbers. What would a year of efficiency look like? Like somebody's putting $5,000 in that year, or what does that look like exactly in numbers, year of efficiency? Give us an example of that.
So you asking how they're putting it in, a client is able to choose whether they want to add to their bank and make monthly deposits or yearly deposits. And so just for an example, let's say a client, the deposits that they have put into their bank is $5,000. Well, when the available cash value is growing by more than the amount you're putting in, that's your year of efficiency.
You mean just in that 1 year? Somebody puts $5,000 a year in as their deposits, then the amount that they have earned just in that year alone is greater than the amount of money they just deposited in that year. That's the year of efficiency. That's remarkable. And that does make it a no-brainer, really.
Yes.
The other thing I wanted to mention, actually, we're always saying that we can help people really from all walks of life. And the thing that I'd like to point out is that, of course, your son is 12 years of age, and his initial deposit into starting this particular type of an account is $500. And he's just going to be putting in $100 a month. And, as he goes through life, that $100 is going to be, that's going to be absolutely nothing. That'll be like $25 really, what it is for us today. But it's important for us to, make sure our listeners are aware that the products that we provide people are available and they're customizable for every single person, every financial position that they're in, what they're capable of doing, whether it's $500 to get it started, or, we've had people that are $50,000, $75,000, $500,000 getting their accounts set up. They say that if you fail to plan, you plan to fail. And a lot of people, even in their 30s, they don't think that something like this is even necessary. But it really is something that we have a responsibility to ourselves. Number one, to be financially and fiscally responsible so that we can take care of ourselves in later life. But then also being able to provide, like you mentioned, something for our heirs. Yeah.
Yeah, Carrie, because as Proverbs 13:22 tells us, a good man leaves an inheritance to his children's children. So let's talk about a few commonly asked questions we get from clients about IULs. So, Carrie, one thing people wonder about is this invested in the stock market? Because we talk about growth that's connected to stock market. So people say, well, is this in like a stock market investment?
That's a really good question. And a lot of people don't understand the difference between the stock market and what an actual index is. So the short answer is no, it is not in the stock market, but it is linked to an index. So an index is a compilation of many different companies, many different stocks that are all put together in one particular grouping. So those companies that are in those groupings are comprised of different technology companies, other companies that are involved in, developments of other sorts, different industries. Some of them are high risk, some of them are low risk, some of them are moderate risk. So they put them all together and they call that one grouping an index. So your money is not directly linked to the stock market in one particular company, but it is linked to a grouping of companies. So it mitigates some of the risk for you. It minimizes the risk that you're exposed to. Again, what I want to point out is that, as Ashley and I have mentioned to you many times before, we are only going to recommend to our clients they put their money in accounts that provides them with a zero floor, meaning zero losses as it pertains to the market or indexes or whatever. Your money is always going to be safe with us.
That's right. And Carrie, that's one of the biggest questions we get from clients is, can I lose money? And it's important for our listeners to understand that policy design is critical. It is so important when it comes to protecting your money. So we're able to help our clients make the best individualized choice for themselves and their families. Another common question we receive is this guaranteed?
Yes, Ashley, there are guarantees like the floor. And remember, the floor means that there aren't going to be any losses, but the projections are going to depend on performance assumptions.
Yeah, so you're saying like we don't have a crystal ball for what the market is going to do in terms of growth, but we do have a crystal ball to be able to tell you that you will never lose money.
Right. And the projections that we show people in the illustrations are always going to be based on factual historical data of what the market has actually done about what these indexes have actually done year after year.
So, Carrie, who do you feel like that IULs are best for?
My initial reaction is going to be that it's for higher income earners, for people that are looking to diversify how their taxes are accrued, for people who are looking for tax diversification, and for some people that are comfortable with some variability in the performance because, again, it's based on the index that we have them in. And it's actually not just one index. I do want to point that out, that when we put someone in an IUL account, it's generally comprised of 3, maybe 4 different indexes, and we will assign a different percentage amount. Like, let's say 50% of that money is put in the S&P, 20% is in another, or 25% is in another index. So we put them in different indexes, but it is depend upon the variability and the performance of those indexes. And then also long-term planners. I mean, look at Reese. He's 12 years old. And I mean, if you could see him too, he's just adorable, but he's a hardworking young man, but he's long-term planning. He recognizes he doesn't need any money for a while. And I'm going to tell you, I tell my kids, you can blow $100 in no time flat. You won't remember what you did with $100. And it's sad to say because honestly, $100 can mean a lot to a lot of people. But if you think about how much money someone spends at Starbucks, or how much they spend going through a drive-through, or how much they spend walking into a convenience store, most people can't tell you what they did exactly with $100. But Reese is seeing the value of taking that $100 before he ever gets a chance to really even look at it. It's coming right out of his account on a monthly basis. It's just withdrawn. He, of course, signs a form, but that money is taken immediately out of his account. So he never notices really the loss of it, but he gets to experience all the gain that his money is earning.
So, Carrie, we've compared the infinite banking versus the IUL. I think it's important to point out that with infinite banking, clients can actually receive guaranteed growth on their money. Now,
Right.
with that, you're sacrificing the ability of the higher growth potential that you could receive with an IUL because you're talking about how it is connected to this market index, which has a greater chance of higher growth. So if we're talking to a client who needs immediate cash access, they want guaranteed growth, liquidity and control, and uninterrupted compound interest, we're going to recommend an infinite banking policy.
That's right. And then with an IUL, though, conversely, with an IUL, the reason why there is more growth potential is because number one, we're deferring access to that money. We're looking long term, like Reese is. We're looking long term at accessing that money. So there's greater growth potential. There's less emphasis on guarantees only because we are dealing with market indexes, right? Those groupings of companies, of stocks. So there's less emphasis on the guarantee. The one very valuable guarantee that you do have with an IUL is you are guaranteed when you work with Ashley and myself that there will be 0 losses. Remember that 0 floor. And there's more flexibility with the structure. So when we set up an IUL and we look at the different indexes that you want to participate in, we can even reevaluate that on an annual basis, and we can put you into different indexes for the following year based on performance. So that performance can fluctuate with the different indexes, but also we can change the indexes that we have you involved in. So in very simple language, infinite banking is typically foundation money. That's money that we put in, we have immediate access to, we have 0 losses again, we have uninterrupted compound interest that our money is earning. And then we also have access to the dividends that the company is earning. And I want to remind you that we discussed this in episode 1 when we talked about whole life, that with this infinite banking, this company that we partner with has been around for over 100 years and has paid dividends even during the Great Depression. So infinite banking is typically foundation money, where an IUL can be opportunity or growth focused money because you are experiencing growth from the market index. So neither is better. They're both going to solve different problems, Ashley. So that's why that consultation that we provide our prospective clients with is so important, because we're asking all the right questions. So we make sure to get the best answers from our clients so we can customize what particular product is going to be the best for them. And don't forget, no fees associated with that.
Exactly. And we never start with the product in mind. We always start with the individual person.
Yes.
So when we have clients come to us, Carrie, we're able to discuss their income, their risk tolerance, how soon they want to have access to their money, what their retirement goals are, what their liquidity needs are, and also what tax brackets they're in.
That's right. And then we also make it very clear that we are going to choose these products, these accounts that we partner our clients with based on the stage of life that they're in. What are the objectives that they have? Are they doing legacy planning, or are they just looking for their own retirement income? What exactly are their objectives? What's their comfort level? Are they no risk, low risk, high risk? And what exactly is the long-term strategy that they currently have? Why is it not working? And what can we do to put them into the best scenario for them? Sometimes it's the infinite banking. Sometimes it's an IUL like Reese. Ashley and her husband and Reese collectively looked at both scenarios and made that decision as a family for what was going to be best for them. And sometimes, quite honestly, a combination is a good thing too. So diversification. Sometimes you want to have immediate access to some of your funds, and sometimes you're okay putting some of that money towards long-term growth.
I think it's important to point out too, Carrie, that when we take a look at a potential client's finances and the accounts that they currently have, we're honest with them about whether we can even help them or not. Periodically, every now and then, we may come across someone where they actually have their money protected already. And we're like, hey, there's not much we can do for you. That doesn't happen very often, but I think it's important for people to know that, like, we're not here just to try to sell you something just for the fact of trying to sell it. Like, we're going to be honest and open with you about whether we can help you or not.
It's a good point, because even just yesterday, when I met those gentlemen at the car wash that we actually spoke about in a previous episode, one of the gentlemen had his money completely protected from market loss. And I actually congratulated him because he's a unicorn. But the other gentleman, he was befuddled that he could actually even protect 100% of his money. So you're right. It is always the desire that we have to help provide clarity, to remove the veil off of people's eyes so that they become intimately familiar with what their retirement is going to look like, how protected their money is, and how that money can be either used for their retirement or used and protected for future generations to come. So we know that one product is not going to solve everything, because we know it doesn't. And infinite banking, it does not necessarily replace retirement accounts, and an IUL does not replace investing. But what is key for everyone to know is that a zero floor is a requirement. I would say that hopefully your standard from listening to these podcasts becomes that losing money is not an option for us. And paying management fees is also no longer an option. I pray that you become uncomfortable with the idea of paying a management fee. And we just want to encourage you to know that the real power isn't in the product, but it is in proper design and proper alignment with what your goals are. Ashley and I are here to help you week after week. We design these podcasts based on questions that we're getting from our listeners, from conversations that we're having, from the assessments that we're doing with other clients who are looking for security and peace of mind when it comes to their finances. So we encourage you, check back with us next Tuesday at 6 a.m. Central Time, where we will have another riveting episode of Wealth, Words, and Wisdom. If you have questions, please make sure to send those to Wealth, Words, and Wisdom podcast at gmail.com. And if you'd like to be added to our newsletter, you can send us an email and we will be more than happy to add you to that. We look forward to providing with another episode next week. Thank you for listening to Wealth, Words, and Wisdom. Our goal is simple. It's to help you approach your financial decisions with clarity, confidence, and with intention. Because we know that when wisdom leads the way, your money decisions will feel less overwhelming and they will be far more aligned with your real life. If something you heard today resonated with you and you'd like to explore your options, we offer complimentary strategy sessions. There's no pressure, there's no obligation, it's just education and clarity. You can reach out to us at Wealth, Words, and Wisdom podcast at gmail.com. And be sure to subscribe to our YouTube channel. And if this episode was helpful, share it with friends or family who you believe could benefit from this conversation. Until next time, remember, wealth grows where wisdom leads.